Based on the historical data and forecast, Bitcoin shows a clear upward trend. The price has been fluctuating but demonstrating a general increase over the past 2 weeks, with a forecast indicating continued growth. The RSI consistently stays above 50, suggesting bullish momentum. The Bollinger Bands are widening, indicating increased volatility and potential for price movement. Considering these factors, I recommend a long position strategy. We will enter a long position at $107,700. The stop loss will be set at $104,300 to protect against a potential downturn. The initial target price will be $114,500, aligning with the forecast price on June 16, 2025. To refine the strategy, we will incorporate RSI and Bollinger Band signals. If the RSI dips below 30, indicating an oversold condition, we will consider adding to the position at the prevailing price. Conversely, if the price touches the upper Bollinger Band, we will consider taking partial profits. This adaptive approach allows us to capitalize on short-term fluctuations while maintaining the overall bullish trend. We will adjust the stop loss upwards as the price increases, securing profits and reducing risk. The final target price will be $116,300, based on the forecast for June 16, 2025. Based on the historical data and forecast, Ethereum shows a clear upward trend. The price has been fluctuating within a range between $26.30 and $27.40, but the recent forecast indicates a strong bullish momentum, reaching $28.10. The RSI has been oscillating, but recently dipped below 50, suggesting a potential buying opportunity. The Bollinger Bands also confirm this, with the price nearing the lower band, indicating a potential bounce. Therefore, I recommend a long position. Enter a long position at $2,680, placing a stop-loss order at $2,630 to limit potential losses. The initial target price should be $2,750, aligning with the upper Bollinger Band and the recent forecast. To maximize returns, we'll implement a dynamic target strategy. Once the price reaches $2,750, move the stop-loss to the entry price of $2,680, securing profits. If the price continues to rise, adjust the target price to $2,810, based on the forecast. This strategy combines RSI and Bollinger Band signals with support and resistance levels to capitalize on the anticipated upward trend. The combination of these technical indicators provides a robust framework for high-return investment in Ethereum. Based on the historical data and forecast, XRP shows a slight upward trend with periods of consolidation. The support price consistently holding at $2.25 indicates a strong floor for the price. The RSI fluctuating between 36.8 and 54.8 suggests that XRP has entered an oversold condition on several days, particularly around June 9, 2025, with an RSI of 36.8. The Bollinger Bands indicate periods of volatility, with the price occasionally touching the upper and lower bands. Considering this, I recommend a strategy combining RSI and Bollinger Bands. When the RSI falls below 20, indicating an oversold condition, we should enter a long position at $2.08 with a stop-loss at $2.05. The target price for this trade should be $2.38, aiming to capitalize on the upward trend and the support level. To further optimize the portfolio, we will incorporate a secondary strategy based on Bollinger Bands. When the price touches the lower band, indicating a potential bounce, we can enter a long position at $2.08 with a stop-loss at $2.06. The target price for this trade should be $2.38, aligning with the forecast and the overall upward momentum. Combining both strategies, the most efficient portfolio will prioritize the RSI signal for entry, but confirm the trade with a touch of the lower Bollinger Band. This approach maximizes the probability of a successful trade while managing risk effectively. The final portfolio will consist of long positions with an entry price of $2.08, a stop loss of $2.05, and a target price of $2.38. Based on the historical data and forecast, BNB shows a slight upward trend, bouncing between a support price of $655 and a resistance price of $686. The RSI fluctuates between 41.4 and 65.9, indicating periods of both oversold and overbought conditions. Considering the forecast for the next week, with prices ranging from $670 to $690, I propose a moderately bullish strategy. We'll implement a strategy based on the Bollinger Bands, aiming to capitalize on potential breakouts. The entry price will be $670, coinciding with the start of the forecast period and a potential support level. A stop loss will be placed at $665 to limit potential losses if the price declines. The initial target price is $681, aligning with the forecast high for midweek. To refine this strategy, we'll incorporate RSI signals. If the price drops to $670 and the RSI dips below 30, we will enter a long position. The stop loss remains at $665. If the RSI reaches 80 before hitting the $681 target, we will take partial profits at $681 and move the stop loss to $672 to protect gains. If the price continues to rise, the final target price will be $690, with a trailing stop loss of $685. This combined approach leverages both Bollinger Bands and RSI to maximize potential returns while managing risk effectively. Based on the historical data and forecast, Solana has been in a downtrend, with the price fluctuating between a support of $150 and a resistance of $172. The RSI has consistently remained below 60, indicating a lack of strong bullish momentum. The Bollinger Bands show that the price is currently near the lower band, suggesting a potential oversold condition. Considering these factors, I recommend a contrarian strategy aiming to capitalize on a potential bounce. We will initiate a long position when the RSI reaches an oversold level of 32.6 on June 3, 2025, at a price of $144. The stop loss will be placed just below the support level at $140, and the initial target price will be the resistance level of $172. To refine the strategy, we will incorporate the Bollinger Bands. If the price touches the lower band of $140, which happened on June 9, 2025, we will enter a long position at $140. The stop loss will be set at $138, and the first target price will be the middle band of the Bollinger Bands, which is $163. If the price reaches the middle band, we will adjust the stop loss to break even and set a second target price at the upper band of $185. This layered approach allows us to manage risk effectively and maximize potential profits while considering the forecast data indicating a potential upward movement towards $167. Based on the historical data and forecast, Dogecoin has shown a declining trend from May 27, 2025, to June 9, 2025, with the RSI consistently below 50, indicating a weakening momentum. The recent drop to $0.171 on June 5, 2025, and subsequent recovery suggest potential volatility. The forecast for June 10, 2025, to June 16, 2025, predicts a slight upward movement, but the overall trend remains uncertain. Considering the support price of $0.182 and the recent price fluctuations, a conservative strategy focusing on short-term gains is recommended. Therefore, I propose a strategy centered around the RSI and Bollinger Bands. We will enter a long position at $0.194 on June 10, 2025, when the price is near the center of the Bollinger Bands. The stop loss will be set at $0.18, just below the support price, to protect against a potential downward reversal. The target price will be $0.205, aligning with the upper edge of the Bollinger Bands and providing a reasonable profit margin. This strategy aims to capitalize on short-term volatility while managing risk by utilizing technical indicators and price levels. Based on the historical data and forecast, TRON shows a generally upward trend with price fluctuations. The RSI consistently stays above 50, indicating bullish momentum, but nearing the overbought level of 80 suggests a potential pullback. The Bollinger Bands show that the price has been fluctuating within the bands, with the recent close price nearing the upper band. The forecast predicts a continued upward trajectory, with prices potentially reaching $0.295. Considering these factors, I recommend a long position entry at $0.286. A stop-loss order should be placed at $0.278 to protect against a sudden downturn, aligning with the support level. The initial target price should be $0.293, based on the forecast and resistance level, offering a reasonable profit margin. To maximize returns, I suggest a dynamic strategy that adjusts the target price based on further price action. If the price reaches $0.293, consider moving the stop-loss to break even and setting a new target at $0.295, aligning with the forecast high. If the price fails to reach $0.293 and shows signs of reversal, consider closing the position and re-evaluating the trend. This strategy combines the bullish momentum indicated by the RSI and Bollinger Bands with the forecast data, while incorporating risk management through stop-loss orders and dynamic target adjustments. The portfolio will be composed of a long position with an entry price of $0.286, a stop-loss of $0.278, and a target price of $0.293. Based on the historical data and forecast, Cardano has shown a downtrend from May 27, 2025, to June 9, 2025, with a recent bounce. The RSI indicates that the asset is currently in an oversold territory, hovering around 36.1 to 49.8. The Bollinger Bands suggest that the price is nearing the lower band, indicating potential for a rebound. Considering these factors, I recommend a contrarian strategy focusing on short-term gains. I suggest entering a long position at $0.656, placing a stop-loss at $0.627, just below the support level. The initial target price should be set at $0.705, aiming to capture the recent upward momentum and the middle Bollinger Band. To refine the strategy, I'll incorporate the RSI and Bollinger Band signals. If the RSI crosses above 50, indicating increasing bullish momentum, I'll adjust the target price to $0.733, aligning with the forecast price for June 16, 2025. Conversely, if the price breaks below the lower Bollinger Band and the RSI falls below 30, I'll exit the position to mitigate potential losses. This blended approach, combining trend analysis, RSI signals, and Bollinger Bands, should provide a robust and adaptive investment strategy for Cardano, maximizing potential returns while managing risk effectively. Based on the historical data and forecast, Sui shows a fluctuating trend with a recent bounce from the support level of $3.19. The RSI indicates that the asset is currently within a neutral range, with values hovering around 40 to 50, suggesting neither strong overbought nor oversold conditions. The Bollinger Bands have been contracting recently, indicating a period of consolidation, but the forecast suggests a potential upward movement with prices expected to reach $3.52. Considering these factors, I recommend a moderate long position strategy. We will enter a long position at $3.36, placing a stop-loss order at $3.19 to protect against a potential downside reversal. The initial target price will be $3.47, aiming to capitalize on the short-term upward momentum indicated by the forecast and the recent support bounce. To refine this strategy, we can incorporate the RSI and Bollinger Bands. If the RSI dips below 30, indicating an oversold condition, we can consider an additional long entry at $3.19 with a stop-loss at $3.1 and a target price of $3.3. Conversely, if the price touches the upper Bollinger Band, indicating an overbought condition, we will consider a short position at $3.93 with a stop-loss at $3.98 and a target price of $3.8. The most efficient portfolio will be a combination of these strategies, allocating more capital to the initial long position at $3.36 due to the stronger support and forecast signals. This blended approach allows us to capture both short-term and potentially larger gains while effectively managing risk. Based on the historical data and forecast, Chainlink has been exhibiting a downtrend followed by consolidation. The RSI consistently dipped below 50, indicating weakening momentum. The recent bounce suggests a potential short-term recovery, but the overall trend remains cautious. Considering the support price of $13.9 and resistance of $15.1, I propose a moderately bullish strategy. We will enter a long position at $14.3, placing a stop-loss at $13.9 to limit potential losses. The initial target price will be $14.6, aligning with the forecast price and the upper Bollinger Band. To refine the strategy, we'll incorporate the Bollinger Bands and RSI. If the price breaks above $14.6, we'll adjust the target price to $14.8. Conversely, if the RSI falls below 30, indicating an oversold condition, we'll exit the position, even if the price is below $14.3. This blended approach aims to capitalize on short-term gains while mitigating risk through strategic stop-loss and target adjustments. The portfolio will consist of 60% of the strategy and 40% of cash. Based on the historical data and forecast, Bonk shows a decreasing trend with consistent support at 0.0000162. The RSI has been fluctuating below 50, indicating a weakening momentum, with recent values hovering around 35 to 48.7. The Bollinger Bands have been contracting, suggesting decreasing volatility, and the forecast prices are slightly decreasing. Given these factors, I recommend a contrarian strategy focusing on short-term gains. We will implement a strategy based on RSI, entering when the RSI dips below 30, and exiting when it reaches 60. Our strategy involves a long position with an entry price of $0.0000145. The stop loss will be set slightly below the support level at $0.0000162, specifically at $0.0000163, to protect against a potential reversal. The target price will be set at $0.0000173, aiming to capitalize on a potential bounce back towards the middle of the Bollinger Bands and a slight increase in RSI. This strategy combines the RSI indicator for identifying potential oversold conditions with the support level for setting a secure stop-loss, and the Bollinger Bands to define a reasonable profit target. This provides a high probability, moderate risk, and short-term investment opportunity. Based on the historical data and forecast, Virtual's protocol shows a fluctuating trend with recent price consolidation near the support level of $1.93. The RSI has been oscillating around the 50 mark, indicating neither strong overbought nor oversold conditions recently. However, the forecast predicts a slight upward movement, with prices potentially reaching $2.22. Considering this, I recommend a moderately bullish strategy. We will initiate a long position when the price breaks above the upper Bollinger Band, which is currently around $2.38. The entry price will be $2.38. To manage risk, we will set a stop loss just below the lower Bollinger Band, which is $1.63. The target price will be determined by the resistance level, which is $2.45. If the price reaches this resistance, we will take profits. If the RSI approaches the overbought level of 80, we will consider reducing our position or tightening our stop loss to protect gains. This strategy combines the momentum of the Bollinger Bands with the established support and resistance levels to maximize potential returns while minimizing risk. The portfolio will consist of 60% based on the Bollinger Bands, 20% based on the RSI, and 20% based on the support and resistance levels. This diversified approach aims to achieve high returns while adapting to market volatility. Based on the historical data and forecast, Raydium exhibits a downtrend. The price has consistently traded below the Bollinger Band center, and the RSI has mostly remained below 50, indicating weakening momentum. The support price consistently holds at $2.36, while the resistance fluctuates around $2.61. Given the forecast for the next week, with prices hovering around $2.3 to $2.4, a short position is warranted. We will implement a strategy combining RSI and Bollinger Band signals. The entry price will be $2.35, coinciding with the initial forecast. A stop loss will be set at $2.45, just above the recent high and the upper Bollinger Band, to limit potential losses if the price unexpectedly reverses. The target price is $2.1, anticipating a further decline based on the downtrend and forecast. To refine this strategy, we'll incorporate an RSI-based exit. If the RSI reaches 80 during the trade, indicating an overbought condition, we will close the position early, securing profits. Conversely, if the RSI drops to 20, signaling an oversold level, we will consider covering the short position and potentially re-entering with a long position if the trend reverses. The portfolio will prioritize the short position with an initial allocation of 70% of the capital, and 30% will be reserved for potential long entry if the RSI indicates a trend reversal. This combined approach leverages both technical indicators and price forecasts to maximize returns while managing risk effectively. Based on the historical data and forecast, Ether.fi shows a slight upward trend with periods of volatility. The RSI fluctuates between 45.4 and 67.2, indicating occasional oversold and overbought conditions. The Bollinger Bands consistently narrow, suggesting decreasing volatility, and the forecast price shows a continued upward trajectory, reaching $1.41. Therefore, I recommend a combined strategy leveraging RSI, Bollinger Bands, and support/resistance levels for optimal returns. We will implement a strategy with an entry price of $1.31, coinciding with the forecast price and a slight dip within the Bollinger Bands. A stop loss will be placed at $1.06, just below the established support level, to mitigate potential losses. The initial target price will be $1.37, aligning with the forecast price and previous resistance. If the price reaches $1.37, we will adjust the stop loss to the entry price of $1.31 and set a new target price of $1.41, based on the forecast high. This combined approach aims to capitalize on the upward trend while minimizing risk through strategic stop loss placements. Based on the historical data and forecast, Pudgy Penguins shows a downtrend with fluctuating volatility. The RSI consistently hovers around the 40 to 50 range, indicating neither strong overbought nor oversold conditions. However, the recent forecast suggests a slight upward movement, potentially bouncing off the support price of $0.0101. The Bollinger Bands are narrowing, which often precedes a breakout. Considering these factors, I propose a moderately bullish strategy. We will implement a strategy based on the RSI with an oversold level of 20 and an overbought level of 80. My recommended strategy is to enter a long position at $0.0107, coinciding with the initial forecast price and near the support level. To manage risk, place a stop-loss order at $0.00978, just below the lower Bollinger Band. For the target price, we aim for $0.011, aligning with the forecast high and a reasonable profit margin. This strategy combines the support level, forecast data, and Bollinger Bands to maximize potential returns while minimizing downside risk. This portfolio is the most efficient of the three strategies. Based on the historical data and forecast, Compound shows a clear upward trend. The price has been consistently rising, breaking through the resistance level of $54.2. The forecast for the next week projects further increases, reaching $53.1. Considering the RSI, which has been fluctuating between 40.9 and 67.9, we are currently approaching the overbought territory. However, the upward trend and forecast suggest a potential for continued gains. Therefore, I recommend a long position strategy. We will enter a long position at $47.9. The stop loss will be set at $46.4 to protect against a potential pullback. The initial target price will be $51.7, aiming to capitalize on the short-term upward momentum. To refine this strategy, we will incorporate the Bollinger Bands. The price has been consistently trading above the center band, indicating a bullish sentiment. If the price touches the lower Bollinger Band, $39.4, it suggests an oversold condition, which could be a potential entry point. However, given the current upward trend, we will stick with the initial entry price of $47.9. The second target price will be $53.1, aligning with the forecast. We will adjust the stop loss to $48.4 once the price reaches $51.7, securing profits while allowing for further upside potential. This portfolio combines RSI and Bollinger Bands to optimize risk and reward. Based on the historical data and forecast, Aave shows a clear upward trend. The price has consistently bounced off the support price of $266, and the forecast indicates a continued rise towards $297. The RSI is currently at 65.3, suggesting the asset is approaching overbought conditions but not yet in an overbought state. The Bollinger Bands are widening, indicating increased volatility and potential for price movement. Therefore, I recommend a long position strategy. Entry price should be $277, with a stop loss placed at $266 to protect against a potential reversal. The initial target price should be $285, aligning with the forecast high for June 15, 2025. To refine the strategy, we will incorporate RSI and Bollinger Band signals. If the price touches the upper Bollinger Band and RSI exceeds 80, consider taking partial profits at $287. Conversely, if the price touches the lower Bollinger Band and RSI falls below 20, reevaluate the position and consider adding to it. The final target price should be $297, based on the forecast high for June 16, 2025. This layered approach allows for profit-taking while capitalizing on the overall upward trend. Based on the historical data and forecast, Eigenlayer shows a mixed trend with periods of volatility. The RSI consistently fluctuates, ranging from 47.2 to 62.3, indicating neither strong overbought nor oversold conditions for most of the period. However, there were a few days where the RSI dipped below 50, suggesting potential short-term oversold opportunities. The Bollinger Bands show that the price has been oscillating within a range, with the top band at 1.66 and the bottom band at 1.16. The forecast for the next week predicts a generally upward trend, with prices ranging from 1.57 to 1.68. Considering these factors, I recommend a moderately bullish strategy focusing on short-term pullbacks. My suggested strategy is to enter a long position when the RSI dips below 50 and touches the oversold level of 20. Specifically, if the price falls to $1.3, enter a long position at $1.3. Place a stop-loss order at $1.26, which is the lower Bollinger Band. Set a target price at $1.68, aligning with the highest forecast price. This strategy combines the RSI oversold signal with the Bollinger Bands to confirm the potential for a rebound. This approach balances risk and reward, capitalizing on short-term price corrections while aiming for a significant profit if the upward trend continues as forecasted. Based on the historical data and forecast, Dogwifhat has shown significant volatility with a recent bounce from the support price of $0.814. The RSI indicates that the asset is currently in a neutral to slightly oversold territory, with values fluctuating between 42.2 and 56.6. The Bollinger Bands suggest that the price has been trading within a range, with recent movement towards the lower band. Considering the forecast for the next week, which predicts a price around $1 to $1.09, I recommend a moderately bullish strategy. We will initiate a long position at $0.826, placing a stop-loss order at $0.787, just below the lower Bollinger Band to mitigate potential losses. The initial target price will be set at $1.03, aligning with the recent resistance and the forecast. To maximize potential returns, we'll implement a dynamic trailing stop-loss. Once the price reaches $1.03, we will adjust the stop-loss to $0.948, the previous resistance level. If the price continues to rise, we will further adjust the stop-loss to $0.872, the next support level. The final target price will be $1.09, based on the forecast. This strategy combines RSI signals, Bollinger Band analysis, and support/resistance levels to capitalize on the anticipated upward trend while managing risk effectively. The portfolio will be 60% RSI strategy, 30% Bollinger Band strategy, and 10% support and resistance strategy. Based on the historical data and forecast, Kaia shows a mixed trend with recent upward momentum. The RSI has been fluctuating, with a peak of 72.4 indicating overbought conditions on June 9, 2025. However, the forecast prices suggest a continued upward trajectory, reaching $0.142 on June 16, 2025. The Bollinger Bands have been widening, indicating increased volatility, with the price recently touching the upper band. Considering these factors, I recommend a long position strategy with a focus on capitalizing on the anticipated upward movement. My strategy is to enter a long position at $0.121. The stop loss will be set at $0.114, aligning with the support price to limit potential losses. The initial target price is $0.13, coinciding with the forecast price on June 12, 2025. If the price reaches this target, we will adjust the stop loss to break even at $0.121 and set a new target price at $0.142, reflecting the higher forecast price on June 16, 2025. This strategy combines RSI, Bollinger Bands, and forecast data to maximize potential returns while managing risk effectively.